If you like what you see, if I can please request you to subscribe to my channel. So what was the LIBOR and when was it born? LIBOR stands for London Interbank Offered Rate. The LIBOR is the interest rate one bank charges the other for a loan. But how did it start? Minos Zombanakis, a Greek banker, wanted to give a loan to the Shah of Iran. The interest rate was an enigma, and so he looked at rates that London banks would charge each other. It was on this day in 1969 that the LIBOR was born. In 1984, the British Bankers Association wanted to add a proper term to traded markets. The LIBOR was first used in 1986 when it was a teenager, and the reach of the LIBOR was felt thousands of miles away for other financial instruments. But just how big was the reach of the LIBOR? The LIBOR was used extensively. Homeowners would use the LIBOR for variable rate mortgages. Small businesses would use it for their loans. Students would use it for their loans. Insurance companies used it for credit default swaps. Municipalities used it when they raised debt. Several other types of debt used the LIBOR. The above examples are not exhaustive. But just how was it calculated? The Intercontinental Exchange polled a panel of banks to arrange for the LIBOR average. For example, the US dollar LIBOR included major banks in the United States like JP Morgan, Citibank. The banks sent their answers on loan maturities which ranged from overnight to 1 year for a specific currency. At 11:55 each day in the United Kingdom, those banks with the license would be able to view the LIBOR rate. The LIBOR was calculated in 5 different currencies: the Swiss franc, the euro, the sterling pound, the Japanese yen, and the US dollar. There were 35 LIBOR rates posted each day with 7 different maturities. Well then, what went wrong with the LIBOR in its old age? It's very important to note that the LIBOR is not set on what banks actually pay to borrow from each other. Instead, it's based on what they submit. It was becoming very easy for banks to submit lower rates and manipulate the index. The LIBOR also assisted in transmitting crises wide and far. In 2008, LIBOR setting banks increased rates, making those financial products very expensive, even though central banks world over were reducing rates. Rates on trillions of financial products soared, basically crashing markets. In my opinion, the LIBOR is a bit of an anachronism. It was a rate used at a time when bankers worked with us within a square mile and knew each other. Trust was a huge element. So my question for the day is that now that the LIBOR is no more, who are its descendants? What is the secured overnight financing rate in the United States? And what is the sterling overnight index average in the UK?